Now, what we're going to do is we're going to move to a 15-minute basis, and we're going to look at last week's trading. Okay, this is last week trading the Euro USD. This is a 15-minute time frame. Now what we're going to do is we're going to put the vertical lines in, delineating the actual days. You have Monday's trading here, Tuesday's trading here, Wednesday, Thursday, and then Friday down here. Now we're calling the market lower, and you can see the market did in fact trade lower. We're going to be looking at um, how price reacted intra-week. Okay, but we're going to talk about some things that haven't really been touched on if you've been following me for a while in great detail. Okay, so now what we're going to do is we're going to be discussing the how the market itself. We're going to zoom out just one more tap just so you can get a feel for what has happened. The market traded lower up in these levels here where we were calling it lower, and broke down rather aggressively. Okay, so you can see much more dynamic view of how price had respected these support and resistance lines that we arrived at on the daily time frame. Okay, so now obviously we can see in hindsight that it caused the market to turn at resistance and support, and once support was broken, eventually traded back to it, found it as resistance. Okay, we understand those central tenets to the marketplace and how technical analysis is generally perceived and or viewed in hindsight basis. Okay, but how do we use these levels going forward? Okay, well, number one, unless you have these types of price points, okay, or support and resistance levels on a higher time frame, there's absolutely zero reason to expect a trade to form. Okay, again, here's one of those notepad moments. Okay, write this down and underline it several times. You do not look for a trade or a trading pattern on your intraday charts unless it is trading at a higher time frame support and resistance level, okay, or at a higher time frame reaction level. That means the trade has to be formulated and framed around a level that you had already arrived at from the daily and or 4 hour time frame. Okay, now here's a question for you, and you already know the answer to this, I'm sure. So again, I'm not trying to browbeat anyone, but I'm telling you, I've done the same stuff. So hopefully you'll learn from it like I did, and you'll stop the bleeding and you'll start moving towards consistency. So now looking at your own personal trading, how many times daily, weekly, in the last few months or so, how many times have you looked at a 5 minute chart or a 1 minute chart, or maybe, an hourly chart, looking for a pattern, a price pattern, and then trying to, chase the market after you see it moving because you didn't have the confidence, the trust, the pattern, because there was nothing framing it on. Okay, you just saw a pattern or a similarity of what would be considered a price pattern, and then reacted to it after the market started moving what you felt was a confidence booster in the favor that the favorable direction the pattern was suggesting it would move, and then all of a sudden saw the market turn on you, even though that supposed price pattern was there, it eventually turned on you. Has that happened to you? I can tell you with great surety, if it hasn't, and if you don't do these types of things, it surely will. Price patterns by themselves, I'll speak harmonically. Gartleys, butterflies, bats, all those patterns, okay, that you hear banted about on the internet and or YouTube educational series or reviews or some quote unquote previews, they may or may not be profitable. But if you don't have that pattern framed around a real reaction level, okay? And again, we've talked about why the market reacts like it does. And when you see market um, moves that are dynamic, okay, because it's the institutional sponsorship that takes the market up or down. Okay, retail traders are not going to do anything to this marketplace. We are participants that are hopefully like the fleas on the dog. Okay, we're on for the ride. Once in a while, we get a